This is Market Lens for Tuesday, June 23, 2026. Today's market map is split between a few resilient uptrends and several areas showing real stress. Emerging markets, Japan, and real estate still hold the strongest scores, while U.S. equities are mixed and crypto is flashing the deepest risk signal. The big question is whether this is a controlled pullback or the start of broader risk reduction. Across the Market Lens ranking, emerging markets lead with the highest opportunity score, followed by Japan equities and real estate. Metals and Hong Kong remain more range-bound, while U.S. equities sit in the middle with mixed trend signals and elevated volatility. At the bottom of the map, China equities remain in a downtrend, and crypto shows the most fragile profile, with high volatility and deeply oversold conditions. The opportunity score ranges from negative caution to positive support, and today's message is selective strength, not broad market calm. Emerging markets equities hold the top position today with an uptrend, normal volatility, and an opportunity score of 2.3. The setup is still constructive because VWO remains above both its 50-day and 200-day moving averages, even after a weaker 1-day and 5-day stretch. That tells us the trend is being tested, but not yet broken. The main supports are normal volatility and a longer-term trend profile that remains intact. The main risks are a stronger US dollar, higher rate expectations, and weaker Asian equity sentiment. Bottom line, emerging markets still look relatively strong, but the cushion has narrowed. Japan equities remain in an uptrend with normal volatility and an opportunity score of 2.0. EWJ is still above both its 50-day and 200-day moving averages, which keeps the broader structure favorable. The latest 1-day decline was sharp, so this is not a smooth uptrend, but the ETF is still near trend rather than stretched. A weaker yen can support exporters, but currency volatility and global risk-off pressure are important headwinds. Bottom line, Japan still has a constructive trend, but the near-term tape needs to stabilize. Real estate is one of the steadier groups in today's Market Lens, with an uptrend, normal volatility, and an opportunity score of 2.0. VNQ is trading above its 50-day and 200-day moving averages, and it posted positive 1-day performance, while several riskier assets were under pressure. The setup is balanced rather than stretched, which helps the risk profile. The challenge is still the rate backdrop. Elevated mortgage rates, financing costs, and renewed rate hike expectations can pressure real estate valuations. Bottom line, real estate looks comparatively stable, but it remains highly sensitive to the interest rate path. Metals are sideways with mixed volatility and an opportunity score of 1.0. Gold and silver are both trading below their 50-day and 200-day moving averages, so the technical picture is under pressure, even though the asset class is not labeled as a full downtrend. Silver is the weaker piece, with high volatility and a very oversold reading, while gold is oversold with elevated volatility. Dollar strength and higher rate expectations remain the biggest headwinds for non-yielding metals. Bottom line, metals may have rebound potential from oversold levels, but the current setup is still choppy and fragile. Hong Kong equities are sideways, with normal volatility and an opportunity score of 0.5. EWH is oversold and trading below both major moving averages, which limits confidence in the setup. Normal volatility helps keep the decline from looking disorderly, but the market has not yet shown a durable upside edge. China-linked risk sentiment, technology weakness, a stronger dollar, and weaker global risk appetite are all weighing on the backdrop. Bottom line, Hong Kong equities look more like a watch-and-wait setup than a confirmed recovery. U.S. equities are mixed, with elevated volatility and an opportunity score of -0.5. The broad market is not uniformly weak, SPY and QQQ remain in uptrends, but GOOG and NVDA are sideways and under short-term pressure. That split matters because it shows strength in the indexes but weakness beneath the surface. AI-related demand and earnings expectations remain supportive themes, yet higher rate expectations and pressure on crowded growth leadership are creating instability. Bottom line, U.S. equities still have pockets of strength, but the risk profile is less clean than the headline indexes suggest. China equities remain in a downtrend, with normal volatility and an opportunity score of -1.7. MCHI is well below both its 50-day and 200-day moving averages, and the recent 5-day decline confirms persistent selling pressure. The normal volatility reading means the move is not disorderly, but it does not change the broader weakness in the trend. Oversold conditions can create rebound risk if sentiment improves, especially if policy support expectations rise. Bottom line, China equities remain fragile, with any rebound still fighting a damaged trend. Crypto is the weakest area in today's market lens, with a downtrend, high volatility, and an opportunity score of -2.5. Bitcoin and Ethereum are both far below their 50-day and 200-day moving averages, which points to significant technical damage. Both are also very oversold, so the market can move sharply in both directions, but that does not automatically mean the trend has healed. A stronger dollar, higher rate expectations, and softer speculative risk appetite remain major headwinds. Bottom line, crypto has rebound risk from oversold levels, but the overall setup remains high risk. Go beyond the highlights. Get the full Market Lens report in your inbox. Powerful AI-driven insights on global markets, critical news, risks, and opportunities to help protect and grow your money.